Hey everyone, thank you for tuning in. Today is Friday, March the 27th. And in this video, I'm going to go over adjustments I made to an unbalanced condor that I placed yesterday afternoon after cash closed, and it expires today. All right, so as we're looking at the options chain here for the SPUs, 0 DTE. The original Unbalanced Condor was set at, we're in the 64 handle here. So I bought the 35.40 put spread. Sold the 35, bought the 40. I did that for about $1.50. And then I sold two put spreads down. How far down did we go here? 70-ish handles, 75 handles, to the 55.60 line in the 63 handle here. I sold two. So I sold two of the 63.60s and I bought two of the doubles. It's not showing that way right now because I made some adjustments, which I'm going to go over. And by the way, the market's currently down 33 points. If we take a quick look at chart, here's what it looks like. We were a bit lower on the open here. Let me go to the SPUs. We're a bit lower on the open, and since we have rallied a touch. Anyway, all right, so here is, make sure I have this right, 40.35, 60.55, 40.35. All right, so here's the original position with the corresponding fills, and it cost me 50 cents to put on the trade. So we see that on the upper bound I have my risk is the debit, so prices above here without any adjustments I would lose the debit. And at the lower end, since I have two spreads here, my risk is going to be 500 because this one expires at max value. Then that neutralizes one of them, and on the remaining spread, I would lose 500 plus the debit I paid. So there's 550 of risk if there's a blowout to the lower end, but while the market opens, as the market opens, and it remains below this area. Okay, so with the market opening at basically a little bit under this long put spread, I was able to make some adjustments, and let's go over the first adjustment that I made. So I'm going to eliminate that, and let's see, that looks good. Okay, so what I did, the first thing I did is I sold put spread a little bit lower than the long put spread. So the long put spread is at the 64, 35, 40 strike lines, and I went down by 10 handles from the 35 strike line, and I sold a put spread at 25.20 here, and I did this for, what did I do here? $2.15 looks like, $2.15. All right. So the $2.15 leaves me with $1.65 credit overall because I paid $50 for the initial structure, and then I have the following. So we can see that I have a bit of a profit buffer, and then I have this tent which represents the condor, and I still have this risk to the downside. The result of this first adjustment is that I do have more downside risk now. These two spreads represent $1,000 in downside risk minus the credit of $1.65. So it would be $835 of downside risk with this first adjustment. But this isn't all that I did. I wanted to deal with these two out of the money spreads, and what I did was a couple of things. All right, so the first thing I did, over there is I converted one of them to a butterfly, and I did that by purchasing put spread at the 60-65 lines. So I bought the 63.65 for 558, and I sold the 63.60 for 483. This is a total of 75 cents. Note that if we add 75 cents to this 0.90, that would bring us back to the $1.65 credit, which when we subtract 75 cents is now a 90-cent credit. So the base buffer has been reduced, but I also took away $500 of risk on this end, and now I have a butterfly at the lower bound. I still have one more spread here, and what I decided to do with that one is just purchase it, buy it back, the 60.55, which is one of the original two, and I paid 45 cents for that. So if we subtract 45 cents from the 90 credit that I had, that leaves me with an overall credit of 45 cents. So the structure that I'm left with is the following. Worst case scenario, I make $45. Fine, no big deal. At the lower end, I have a pin the tail on the donkey butterfly at the 63.60 line, and that would leave me with a total of 545 at the apex. And over here, I have a condor that has a width of 10 between the spreads. So I have a condor where I can still make an extra 545 in this compressed sort of narrow profit tent. But note that it is wider than a butterfly. So this is what I'm left with for the time being. 45 credit overall. That's the worst case scenario. The risk that I had initially down here of 550, that's gone. Pieces have been rearranged, and I'm left with the following. So that's how I decided to deal with the risk I had of this position, and it took me about no more than 15 minutes. It's currently 6:59 a.m. Pacific time, so you can see it doesn't take much time to manage these things. It just depends on what's going on with price of the underlying and how you want to handle the risk. All right, that's it for now. Thanks for tuning in. Catch you guys next time.